Life insurance player Sanlam Limited released their annual financial results today for the 12 months ended December 2024. The company reported that its net result from financial results came in at 14.1 billion rand. That's up 14% on the previous year. When you factor in the so-called once-off reinsurance capture fee, that result came in at 15.4 billion rand. Sanlam reported that headline earnings per share rose by 37% at 964 cents, with shareholders set to get a final gross dividend of 4.45 rand, which is up 11% on the year prior. Well, to give us the backstory behind the numbers, I'm joined by Paul Hanratty. He's the CEO at the Sanlam Group. Thank you very much, Paul, for joining us. So your new business volumes in the year under review grew around 4%, but the numbers you're reporting to the market today look quite robust. What were the drivers behind this?
Look, we had very good performance right across all of our different business units, whether they were in South Africa, the rest of Africa in our partnership with Allianz, or in India. So just really good underlying momentum in each of those businesses with a number of years back to back of growing market share, very robust new business growth. And of course, scale and efficiency in our business. We've also had, really relatively benign investment markets during 2024. That's helped us a lot. And I guess the other big feature was a turnaround in the underwriting performance at Santam. Santam is a great measure of the underlying risk that applies in the South African economy. And as you know, we've had weather-related events, rising crime, and deteriorating infrastructure. Plus, we've had a huge dose of inflation as well, which affects claims costs. So these issues have all been dealt with, brought under control, and that's helped to turn around and get us back to more normal underwriting profits in South Africa.
So you've given us a great overview of what's happened, but I'd like us to just home in on some of the issues. So in terms of your investment arm of the business, you did well. And of course, I suppose it makes sense because 2024 was a good year for the financial capital markets of South Africa, particularly the second half of it.
That's right. We have had, as you say, across the asset management industry, buoyant returns. That has helped. But I think we've also probably had the strongest growth in assets from customers. And that's a function both of the breadth of our offering and the quality of it, plus the quality of our distribution. So between, the underlying growth in monies that people are placing with us, plus buoyant markets, it's really helped us tremendously in this period.
So increasingly climate change impacts mean insurance companies having to come to the rescue. So what does that mean in practice? Are you increasingly
I'm sorry, we've lost you. You're not coming through anymore.
Oh, okay. That's unfortunate. If Mr. Hanratty can't hear me, we'll have to make a plan.
I can hear you now again.
Okay, super. So what I wanted to ask you, Paul, is increasingly climate change impacts mean that insurance companies have to come to the rescue. I mean, if we look at what's been happening in South Africa right now in terms of the rains and so on, people's houses being flooded and et cetera, et cetera. What does this mean from your perspective in terms of the kind of insurance that you give? Do you have to adjust what you're prepared to cover? And also, does that mean that increasingly we're going to see premiums go up?
Yeah, Nambu, unfortunately, you're absolutely right. We become much more selective in where we will accept risks. So we go through a process which is called geocoding. So we know for every single person who wants insurance exactly where your property is. We know and can figure out the probabilities of impacts from weather-related events. And what we're doing is we're basically avoiding taking risk in areas that have been very affected by climate change. And that's unfortunate for consumers. And of course, ultimately, it does mean that prices are likely to rise if people want to have cover, because you'll have the whole industry basically looking very carefully at risk. And unfortunately, it's not just a South African problem, but a global problem where a a lot of building and development has taken place in areas where, frankly, it shouldn't. And of course, you also need your infrastructure to be able to support to support things. So, if your drainage doesn't work well, then when you have very heavy rains, that's a problem. Whereas if your drainage system was working well, very heavy rains would be much less of a problem. So unfortunately, the consumer is ultimately going to have to pay for the combination of climate change and deteriorating infrastructure.
That's very unfortunate. Of course, there's a lot of hope for the local economy around structural reforms, but then there are also global threats to economies as well. So what is your outlook given the domestic and international influences on the economy for 2025?
So look, we're absolutely massively positive because, every single market that we're operating in, we've got a strong outlook for economic growth. Even South Africa, although our expectations are still for a low growth rate, it's a lot better than it was in 2024. The wild card, as I think you've alluded to, is the impacts of US policy. So, expectations of growth in the US have been absolutely slashed in the last week by the Federal Reserve. That's very, very worrying because that will impact the whole world. And of course, some of the actions have also meant that, there are inflationary pressures now, not only in the US, but right across the world from tariffs. Of course, these are short term, right? Because once everybody's adjusted to the new tariffs, inflation will tail back. But you've pushed out the prospect of interest rate cuts. And there's no question that I think what we've got now is more uncertainty, more volatility, and potentially some real negative economic forces at work in the US. And of course, if Europe also has to dramatically step up spending on defense and have to sort out their own budgets, they either are going to have to issue a lot more debt or pull back spending very strongly in other areas. And there's no question that this is going to have some negative impacts for the rest of the world. But we're still very, very bullish in total. And each of our businesses, I think, is very well positioned to take advantage of growth in the markets we're in, which is Africa and India.
All right. Thank you so much, Mr. Hanratty, for your time there. That was Paul Hanratty. He's the CEO at the Sanlam Group.